Tom Lee has had a lot to say as it relates to the markets and where we are most likely headed over the next couple of weeks in a lot of comments that he made on Friday and over this weekend. We're going to be breaking down all of the comments that Tom Lee has made and all of the stocks that they are really interested in at fundstrat for some potential aggressive movement to the upside in the near future. Guys, we have a boatload to talk about in this video here. We're going to be talking about some historical data, some of the big breaking news that we have seen over this weekend as it relates to kind of the walking back of some of these tariffs, and then Lutnick coming out and kind of ruining the fun there. But again, we're going to break that all down. And again, guys, if you do enjoy the information and analysis I provide for you guys in these videos here, make sure you go down and hit that like button. It costs you nothing to do it, but it helps me out a whole lot in spreading these videos out to as many people who actually want to learn. And again, if you never want to miss another video like this, make sure you guys are subscribed and turn on notifications so you're notified every single time these videos go live. But without further ado, let's roll the Tom Lee clip and get into all of this information.
Well, I think a couple of things that we're thinking about is we know markets have gotten very pessimistic. They've priced in a 60% probability of a recession. And if tariff negotiations de-escalate, then the probability isn't that high. So I think that there's still a big window for markets to have a large rebound, but it's really the path of this de-escalation.
We're in a bear market. I mean, we're in a bear market, right? I mean, it almost doesn't matter, you know, textbook whether you say we are or not. It's like so many stocks got just absolutely destroyed before this uncertainty happened in the market.
Yes, I mean, if we define a bear market as stocks feel like a grind or you're losing money, I'd say it really started in December because markets were churning even through the February high. But if I was to define a bear market as unleashing a type of financial tightening that leads to a recession, we're not at that criteria yet. But I think it feels like a bear market for the average person.
Are we supposed to buy into that or just stay cautious and on the sidelines, don't do anything, sit on our hands? I don't think people know what to do. And I'm not just talking in the CEO suites because they obviously don't know what to do. How can you? So what is the investor supposed to do? Yeah,
I mean, I think there's sort of two brains people are fighting. One is the tactical brain, which is, look, they want to know if this is a bottom, and they want to be convinced of it by seeing stocks rally on bad news. But if someone had the investor hat on, and that's the long-term brain, I have a lot of confidence the U.S. companies are going to navigate through this treachery. Stocks are hugely oversold because you never really lose money buying the VIX at 50. Or when the percentage of stocks above the 200-day drops to 15, those are almost guarantees of positive 1-year, 3-year, 5-year returns. So it depends which brain you're wearing today, but I'd say the majority of our clients are trying to be tactical.
I hear views of, well, it's really hard to get uber bearish now because a headline at any moment, as I said in the open here, the market is waiting so hard for some bit of good news that if you're on the wrong side of that, you get a day like you had on Wednesday.
Yes. I mean, if I was to oversimplify the framing of this, U.S. and China have absurd levels of reciprocal tariffs at the moment. And if you believe those are in place, then the global economy is in trouble and you should be bearish. But if this is a matter of who makes the overture first or blinks, but we know it de-escalates, then I think the downside has largely, it comes off dramatically, and I think stocks can actually do really well into the rest of the year.
So you'd be a buyer right now?
Yes, and with the apology that, of course, I didn't think Liberation Day was going to be this draconian, but yes, I would be buying stocks today.
What would you buy?
Well, one of the things we did for our clients last night is to look at what's called Walter Deemer calls sold out stocks, which is worse than oversold. Sold out stocks don't go down because there's a lot of bad news priced in. Mm-hmm. There's a lot of stocks that didn't make new lows on Tuesday, April 8th. They made their lows a month ago, and they had lower volume on April 8th. Those are what I'd call washed out stocks. A group that I think is washed out is the Mag 7. So I'd look at Mag 7 as a place to really expect a rebound, including stocks like Tesla.
Okay. You used the word draconian. That was your word. But I'm going to play off of that and say, well, what if we're in a post-draconian period where, because of that,
So as you can hear in that clip there from Tom Lee, he is still very bullish on this market, but again, with a little bit more of that kind of cautious optimism going into the next couple of weeks here, and for a couple of reasons. When we move over here and take a look at some of the historical data when the VIX is elevated the way that it is right now, the volatility index, well, as we can see in almost every single instance since 1998 here, over the next 12 months, we have had some significant positive returns going over that next time period after the VIX gets elevated the way that it is here. Now, there's a lot of other data points out there that you guys could take a look at. Again, Tom Lee says that this is almost a guarantee. Sometimes you have to take a lot of this data with a grain of salt. Just think about 2008 here. There were many different days within 2008 in the financial crisis when the VIX was closing above these 45 and 50 levels. So that can kind of weigh down the data points there, where you see, okay, you have a lot of instances where the VIX is closing above these levels, and then the forward 12-month returns are actually really positive. But again, looking at the data like this, again, in most cases, we do have significant positive returns. You can see the average here when the VIX is closing above 43 for the next 12 months in the S&P 500 total return index is about 20% there. Now, again, Tom Lee did bring this up as well too. The percentage of stocks that are below their 200-day moving average on the S&P 500 right now is again below that 25% threshold, which again, historically can serve as a little bit of a buying opportunity there. But the one thing that I've been trying to get across to all of you guys that have been watching these videos here is it is better to be late than wrong in this market environment. I still think a lot of people are flying in too early and looking at just overall price action to dictate what they're going to do next in the market, when in reality, what you need to be looking for is what is actually changing with the big picture. How are these new trade talks developing? What does the growth landscape look like? What is the Federal Reserve looking like they want to do? Again, we did see from one of the FOMC speakers on Friday say that the Federal Reserve would serve as a backstop if markets started to get really out of control there. So the Fed put is still in place. We kind of saw that Trump put, the Trump economic put, come into effect this week as well. And we do have some more comments on this over this weekend that we have to cover. But again, we did also hear Tom Lee speaking, again, very positively about Mag 7. You kind of take a look here just at the Roundhill Magnificent 7 ETF. We are starting to make a bottom. It doesn't necessarily mean this is going to be the bottom, but this is still a solid thing to see here. And again, when we think about the stocks that Tom Lee is focusing in on, we actually have a different set of stocks here that I think a lot of you guys are going to find very interesting, and we're going to cover that towards the later half of this video. But I want to make sure that kind of the landscape is clear to everybody before we continue. Now, the one thing that Tom Lee did talk about as well in his monthly webinar is finally we did start to talk about these effective tariff rates. This was something that, again, I was telling all of my subscribers in VIX Insights and Less Trades, More Profits that we have to be focused in on. Yes, seeing kind of this delay in these reciprocal tariffs is good, but when you see this significant increase in the tariff rates on China, you have to think about what the average effective tariff rate actually is, and seeing this really unchanged and actually potentially moving up after that announcement that we received this week, again, doesn't really change anything with the broad landscape. But that is when we start to get into some of the news that has started to come out this weekend. So when we move over here, we can see that smartphones and computers are now exempt from Trump's latest tariffs. Now, again, when you think about technology, smartphones, computers, well, again, that could help Apple, and we could easily see Mag 7 get a little bit of a boost from this, and the overall effective tariff rate actually starting to move down to a point where investors could feel a lot more comfortable putting capital back into this market. But as you can see right up here, the overall fear and greed index is still showing us that we are at extreme fear levels in this market. Now, you saw it kind of on some of the weekend Wall Street numbers that once this news was released yesterday, the markets, again, some of the projections were reacting very positively to this, but then Lutnick came over here and started to ruin all of the fun. Commerce Secretary Lutnick says tariff exemptions for electronics are only temporary. Lutnick said semiconductor tariffs will likely come in a month or two. Commerce Secretary Howard Lutnick said Sunday that the administration's decision Friday night to exempt a range of electronic devices from tariffs implemented earlier this month was only a temporary reprieve, with the secretary announcing that those items would be subject to semiconductor tariffs that will likely come in a month or two. All those products are going to come under semiconductors, and they're going to have a special focus type of tariff to make sure that those products get reshored. We need to have semiconductors, we need to have chips, and we need to have flat panels. We need to have these things made in America. We can't be reliant on Southeast Asia for all of these things that operate for us. So guys, the key word, again, going into this next week's trading week is going to be uncertainty. We still don't know how this situation is going to continuously develop. We still have that potential growth scare of growth moving to the downside. Again, as we get into earnings season as well, you are most likely going to see a significant amount of corporations that are pulling their guidance. And again, for me, I really don't think that the market is going to penalize a lot of these large corporations, Mag 7, for pulling that guidance off going into the end of the year, just again, due to the amount of uncertainty as it relates to and caused by a lot of these new different trade developments, which are changing every single day. Again, we went from we're so back on Saturday to, we might be back in the same position that we were in going into Friday's close once Lutnick started to walk some of these statements back. Now, Tom Lee and Fundstrat have also kind of gone through some different stocks here that are not going to be as affected by these tariffs, and those have actually had some really strong performance for them over the last couple of weeks and months here, and something that they're going to be putting a heavy emphasis on in addition to Mag 7 going forward. And I want to play another clip from Tom Lee, kind of show you guys these different tickers and whether or not these could be things that you guys want to add to your portfolios or even make a new purchase or even add to these existing positions that you may have going forward.
9 stocks have 60% supplier exposure domestically, which is kind of a good ratio. Top of the list are names like MicroStrategy, Palantir, Progressive, CrowdStrike, really popular names. And as you can see here, MicroStrategy and Palantir are 100% US sourced companies.
So Tom Lee is doing something very intelligent here, looking at the broad landscape and saying, okay, which corporations out there may not be as affected by these new tariffs and this new trade policy than some of these others. And you can see there, MicroStrategy and Palantir have been highlighted as those two really top names. Now, I want to bring you guys over to a couple of different things as it relates to these two names here. And the first is going to be this chart of Bitcoin. Again, if you guys have been following along on Twitter, really over the last couple of months here, we've had that line in the sand at 90,700. Right as we broke that area, again, Bitcoin broke down. We saw the strategic crypto reserve announcement. This really just served as a break-in retest. We pushed to the downside, and Bitcoin has just kind of been chopping around, but quite honestly, holding a lot better than the broad indexes, which is a bit strange because typically Bitcoin and a lot of the other cryptocurrencies are going to be labeled as risk assets. And as investors go risk off, well, obviously you would expect these to lead the way down. And that's not what you've seen out of Bitcoin this time around. And the second thing that we have to take a look at here, a chart that I bring up a lot, is Bitcoin versus the global M2 money supply. And you can see that these are highly correlated, with Bitcoin typically lagging a little bit, but we have really started to catch up here. And it could mean that Bitcoin is due for some potential movement to the upside, especially if we start to get into the middle and later parts of this year and the Fed starts loosening financial conditions. We could also see, again, deregulation in the banking system. We could see new positive crypto policies coming out from this new administration here. There is a lot to be said for the positive prospects for Bitcoin and crypto as a whole moving forward. And again, with the amount of crypto and Bitcoin that MicroStrategy holds, that could be a good sign that we have bottomed in MicroStrategy, and this could start moving to the upside here. And again, looking at this chart, we have bounced right off of, or right near, this 200 exponential moving average a couple of times recently. And again, this is really serving as a pretty strong base right now, and could mean that we could see some significant movement to the upside, not only in Bitcoin, but then kind of moving back into MicroStrategy as well. Now, the other name that we have to talk about here is one that we've talked about on this channel a lot, and that is Palantir. And for those of you guys in the Less Trades, More Profits community, you guys know that this is looking like a very, very bullish chart setup going into this week here. This is going to be one that is going to be on high alert for us. Again, if you guys do want to join the Discord community, again, you guys get access to all of the educational courses, both of them. You guys get the daily private live streams, the macro research reports, single stock research reports, weekly market research reports, all of the watch lists of stocks and cryptos that are about to explode before they do, the pre-market plans. Guys, it is the best community if you guys want to come and learn to have long-term success in this market. That link will be down below. But looking at this chart of Palantir here, again, we have seen some aggressive buying come up on this name. We are consolidating right above the daily 10 exponential moving average, and this one is set up for some potential movement higher. Again, just looking technically on this chart, this one is looking relatively solid here. And one of the other things that we've been talking about a lot as it relates to Palantir, again, the main reason why this sell-off started in Palantir here and the reason why it was so aggressive was one, the market was just kind of looking for any excuse to sell this thing because it had such great performance in 2024. And when just that one hint of bad news came out, which was the potential for the Pentagon to be cutting the defense budget by about 8% every single year, with Palantir getting a significant portion of their revenues from the government and also defense, again, that could have been a sign that their revenues were going to decrease. But as we've talked about a lot with those clips from Alex Karp saying that, again, Doge and these potential government spending cuts are going to be good for the US as a whole, and also that Palantir is really not going to be affected by this. Again, we've talked about that many times in the past. We're not going to go in depth in that in this video. Again, make sure you guys are subscribed. We talk about Palantir a lot here. But when we also see things like this come out here, why the ultimate peace president wants to spend $1 trillion on defense, increasing the defense budget, again, was not really, I don't think, what was on people's bingos cards going into this year, but that is now something that is being floated. And where is a lot of this new additional spending going to go? Well, again, with Palantir really being able to deliver solid results for whether it be their commercial clients or their government clients, the United States, again, this could be a name that is going to get a lot more of this revenue moving forward. Growing the revenues, higher growth is again going to eventually lead to higher share prices. Again, even though this valuation is pretty rich right now, this could be a tactical buying opportunity for some short-term movements to the upside here. So guys, that is really going to wrap up this video here. Again, if you did enjoy the information and analysis I provided for you guys in this one, make sure you go down and hit that like button. It costs you nothing to do it, but it helps me out a whole lot in spreading these videos out to as many people who actually want to learn. And again, if you never want to miss another video like this, make sure you guys are subscribed, turn on notifications so you're notified every time these videos go live. But until next time, guys, I will see you. Peace.